Hello and good morning, everybody. It's always a pleasure to see you here. Welcome to the Impact Money Show. The Impact Money Show, where we talk about your money, what's going on in the world. We talk about the money. We talk about the politics. We talk about it all. I'll tell you what, X live feed has been real rough lately. I don't know why it's not working correctly. Hopefully, you guys have to click into the link in order to join us. I don't know why it's being like that, but it is. I asked X about it, and they said, well, it's not supposed to auto-populate. I said, well, that's pretty rough for us people out here trying to reach our audience. They said, oh, okay. Anyway, top of the morning to everybody. It is red markets, golden opportunities, navigating the financial storm with Trump's ascendancy. And on the Impact Money Show, we don't just watch the markets, we scrutinize them for you. Today, we're standing at a precipice of what feels like a financial retreat on all fronts. From stocks to cryptocurrencies to commodities to oil, the markets are bleeding red. Yet in the sea of decline, gold stands out with a modest 0.5% increase. And the US dollar, which seemed unstoppable, has paused at 108.16 on the Richter scale. No, just kidding. On the DXY. The DXY is the US dollar traded against a basket of other cryptocurrencies. And that's how we derive, that's how we trade on the value of the dollar. It has been on an impressive run, of course, with the Fed's decision. Let me just send this over to our friend here. Boom. Okay. Send that over to him. Okay. Here we go. Let's break it all down for you. The stock market plunge. We're not talking about a mild correction here. We're witnessing a significant downturn across major indices. The Dow, after ending a 10-day losing streak with only a modest gain, couldn't halt the broader market slide. The NASDAQ and S&P 500 are also down, reflecting a pervasive pessimism that isn't just about profit taking, it's about reassessing the post-election landscape with Donald Trump at the helm. Investors are recalibrating for a potential policy shifts that could affect everything from corporate taxes to international trade. The uncertainty around these changes, coupled with the Federal Reserve's cautious stance on interest rates, has investors on edge, pondering if this is a start of a more prolonged bear market. Kind of funny, almost like the Federal Reserve did it on purpose, right? It's almost like they did it on purpose. What do you think? What do you think? Cryptocurrency chaos. Bitcoin, which flirted with highs above $108,000, has now dipped below $94,000. Marking a 13% drop this week. This isn't just market volatility, it's a reaction to Trump's incoming administration, which has promised crypto-friendly policies, but also introduced uncertainty. The U.S. government's movement of roughly $1 billion in Bitcoin has fueled speculation. Did they sell to crash the market? Or was it merely a transfer for administrative purposes? The lack of clarity has led to a sell-off, with investors questioning the stability of the future regulation of cryptocurrencies. Gold's cautious optimism. Gold's slight rise today might seem minor, but it speaks volumes. It's not just about seeking safety. It's also about hedging against potential inflation or banking on the idea of a strategic Bitcoin reserve by the U.S. government. However, the increase is tempered, suggesting investors are cautiously optimistic perhaps waiting for more concrete policy directions from the incoming administration. The U.S. dollar pause. After significant gains, the dollar's slight decline today could be investors taking profits or a sign of doubt about the sustainability of the U.S. economic growth under new leadership. With Trump's promise of economic revitalization, the market is now in a wait-and-see mode, especially regarding the Federal Reserve's next move on interest rates, which now seem less predictable. As well, we have the geopolitical shifts with far-reaching consequences, the fall of Assad in Syria, and the rise of the former al-Qaeda leader with alleged support from the U.S., Israel, and Turkey introduces a new dynamic into the Middle East, policies, and economics. Just checking over here. Bitcoin flirting around 94K at the moment. The historical ties between the U.S. intelligence groups and what would evolve into al-Qaeda during the Soviet-Afghan War are well documented. In Syria, operations like Timber Sycamore have been criticized for potentially arming the groups that later aligned with or were part of al-Qaeda, although the support was intended for broader anti-Assad, anti-ISIS efforts. Support from the U.S., Turkey, and Israel allegations of funding and logistical support for these nations to al-Qaeda affiliated groups often stem from strategic interests rather than ideological alignments. For Turkey, it's about countering Kurdish forces and Assad. For Israel, it's about their Greater Israel Project. And for the U.S., it's about a complex balance of power, the military-industrial complex, where these groups serve as pawns in the larger geopolitical game. This scenario significantly impacts oil prices, Middle Eastern stability, and global security, all of which feed back into economic performance worldwide. Today, we're going to explore the potential longevity of this market downturn. Are we in for a prolonged bear market or a quick recovery? Gold's role as a safe haven versus a speculative asset in today's climate. The U.S. dollar's trajectory in light of the new economic policies. How the Syrian situation might reshape regional and global economic dynamics. The future of cryptocurrency amidst government intervention and policy uncertainty. Of course, the great Matt Dixon will join in a bit with the Market Watch. We'll dissect the markets. This is the Impact Money Show, where we aim not just to inform, but to empower you with knowledge in these turbulent financial times. Stay with us as we delve into these topics, providing a lens which you can view your investment decisions. Of course, we celebrated our 1-year anniversary yesterday. We've been doing the show for 1 year. Johnny Noteworthy, morning, Bruce. Everything is down. Even the video is down. It's time to buy. Yes, you are right, Johnny. Of course, Matt will be on and he'll tell you, don't catch a falling knife. I had my buddy message me yesterday. He says, everybody's complaining about the Bitcoin dipping. He's like, this is great. I'm just buying. Of course, I think that was at 97 and we're now at 94. Okay, so you got to be careful. So yes, but also be careful. Dollar cost average is a good play. We could be in for a bit more of a downturn. But in general, yes, that is a good strategy. You buy when there's blood in the streets. That's how you make money. Johnny, good morning, brother. I have some friends here today. The Squid Game. You might have seen me put out a post for these guys. Let me just get right over here. While I'm doing this, check out this guy. This is wild. Share screen. He solves this wild. Angel Alvarado is solving 3 Rubik's cubes while juggling them. Here's the Guinness. Here is his Guinness Book of World Records performance. Oh well, I pulled it. Check it out, man. Watch that left hand. He's like, boom. Man, this is wild. That kid is a superior mind. Pretty amazing stuff. All right, while we're doing this here, I wanted to talk about Squid with Squid Game season 2 just a week away. I posted this a few days ago. Squid Game VIP is rolling out exclusive early campaign to heighten the anticipation. 456 USDT daily airdrops, official Telegram premium purchases. If you recall the frenzy around Squid from 3 years back, this season promises even more thrilling challenges with significantly larger rewards. Don't miss out, they say. This is Squid Game. So they have been doing a pre-sale, and they've now extended the pre-sale. The bread and lottery. Here you go. Join to collect. And this is at squidgame.top. Bread and lottery, it says here. Okay. This is a community airdrop event. So if you want to participate in this, you can go over here and start earning. You click on right here, okay? pretty well done deal here. This Squid Game. You can see some of the screenshots they have here. Statistics there. (2021) they're talking about Squid, the season debuts, Squid Game red carpet highlights here. Now they're doing a pre-sale right now, and the pre-sale has been extended. Here it is right here. They've raised $149,000 so far. So check them out. SquidGame.top. They are really doing a pretty cool stuff. Check out their Twitter over here. You can give them a follow on Twitter. Squid VIP Game. Yeah, I mean, they are doing the deal. That's for sure. So check them out. Squid Game VIP. I have the market watch here. Boom, from Matt Dixon.
Good morning, Bruce, and good morning, Impact Money viewers. What a pleasure it has been for the past year. This is the 1-year anniversary for the Impact Money Show, and we've seen a lot of changes. I think we've been really good with our predictions and projections for the market, and hopefully the next year will be the same. So let's just jump straight in. There's so much news to talk about today. We've obviously had the interest rate decision out of the US last night, which the rate decision went exactly as expected, a 0.25% reduction, 25 basis point reduction in the interest rate. And that was exactly what the market expected, 97% chance that we're going to see that reduction. But what was really interesting was, and what we anticipated was, the commentary that came after was basically saying they're going to scale back on those interest rate cuts next year. We had factored in about 4 rate cuts for next year. This is now being cut to 2 rate cuts, and probably they're going to be on hold for January. So they're really scaling back those interest rate cuts. That means there's going to be less money available in the economy. And what are the reasons for that? They didn't give clear reasons, but they did say the change of administration. And clearly this is a reference to Trump coming in, inauguration on 20th of January. And he's going to start straight away with some trade policies, and basically it's effectively going to restrict trade. There's going to be some trade barriers, and this is actually inflationary. So it's one of the issues that they've got. They've been reducing interest rates, so they're now going to have to cut back on those interest rate reductions because there's inflationary policies coming through now from Trump. But also the US economy is actually on a reasonably stable, sound footing, and the US dollar has remained strong. So maybe there's not so much of a call for higher interest rates. When we see it's a difficult, as I say, it's always a balancing act. I mean, we're seeing reasonably robust growth. Unemployment is in pretty good shape. The big fly in the ointment is actually the inflation rate, which is still way above target. And that's the real problem. And that's why I think the reason why they really can't continue to cut interest rates at the rate they've been doing. They've cut 1% now since last September. So they're cut very aggressively, or quite aggressively anyway. And I think they have to scale back now on those interest rate cuts. We're getting more towards a normal interest rate, what they would call normal, but I think there's still scope for reductions. That's what they're saying. But with inflation rates so elevated, how can they reduce? So let's just have a look. We've been on this show now. It's a year today. So let's just look where we've gone from there. So here's a longish term chart of the SPX, S&P 500. quite interestingly, from the bottom left, what I did, and I'll just move the Fibonacci measuring tool, and you can see that I measured from the bottom of this, on the bottom left, to the top of this wave. That's 100% to here. And what I do, I just transpose that same measurement to the bottom of the next wave, which is here. And interestingly, so you can see I moved from here to here. It's the same measurement. So this is the 100% projection. So it measures this wave and projects it from the bottom of this wave to give us the 100% projection to here. Now, it's really interesting. We saw not only a cap in the S&P 500 at that level, so we could predict that well in advance. And the reason, I'll just come back to why I'm saying that, we also got regular bearish divergence telling us there's going to be a turn about this point. So a couple of pieces of evidence there. There's obviously more evidence, but we won't go into everything that we have at our disposal now. Just focus on these two. So interestingly, when we started this show, the S&P 500 was here at 4,700. And even at that point, we're saying it looks like it's got a lot higher to go. Now, why would we say that? First of all, we just use this 100% projection. That's the most likely projection, where if this was an A wave, B wave, and C wave, the C wave most commonly equals the A wave. So that's a reasonable expectation to have. So from this point where the S&P was 4,700, we had an expectation that it's probably going to reach 6,000, somewhere around the 6,000 level, which is precisely what it did. So from this point, we were bullish the market, and we're always saying buy pullbacks, buy the dips, because the market is looking bullish for the time being. Now, at the moment, I wouldn't be buying because we're all-time high, and we've actually got a decent pullback. So the decent pullback, if I go to, I think I'll probably come back to it and look at shorter time frames, but I just expand this one, and you can see there the substantial pullback. I said we kept banging our head against that glass ceiling, this 100% extension here, and this regular bearish divergence here. This was the overhead resistance that we weren't able to break. And you can see last night we actually smashed down. We hit our head against it and again bounced down to the downside on the S&P 500. So a very substantial sell-off. I think there's somewhere around about a 3% sell-off. And in stock market terms, that is substantial. It's a fair old move. But it was to be expected. We actually fully expected they were going to keep rates, drop rates by a quarter, which is exactly what they did. And we also fully expected they were going to scale back on the rate cuts, which is exactly what we did. And that was the reason that the stock market sold off. Not just the stock markets, but I think Dow was down about 2.5%. I think the S&P was around about 3%, and I think Nasdaq was 3.5% down. And I'll just check. I think we'll probably see a follow through on other stock markets around the world. Let me just have a quick check where we're at. Yeah, seeing not much of a sell-off actually. We're seeing the Hang Seng down 112 points, so not much at all. The Dow was actually down 1,123 points yesterday. We're seeing the FTSE open sharply lower, though, down 100 points at the moment. So actually, it's red across the board right now. Everything's in the red, selling off. But we started to see an early morning bounce back on crypto. Whether that will follow through, carry through, I don't know. I've got some doubts about that. Very often, very early morning price action is often reversed later on. So let's see. As I say, we expected this turn down. We're actually telling people we would not be buying at these levels. And actually, the risk reward was quite good for a sell, bearing in mind we had this overhead resistance in place and the bearish divergence. So there was good risk reward for a sell on that. Same across a lot of the assets. So that's the S&P. Let's just take a little look at dollar index, because that took a big pump last night. The reason it took a pump, of course, is because the Fed was saying there's going to be fewer interest rate cuts next year. That means effectively interest rates will stay higher for longer. That means the dollar is more attractive to invest into because it's paying higher rates of interest. And so the dollar rallied very strongly on that news. And again, that was an expectation, because from this previous high, we've had an A, B, C down. We already had that labeled. And so we've moved up there. I think we're moving up in a final C wave, because I think that the dollar index is in actually a longish term correction. an ABC correction. I don't think it's going to be bounded by this 100% here. We already touched that, bounced back down, and then we just broke through slightly last night, although we've come back down again below. But we're somewhere near to really a peak in the dollar, I believe. I mean, obviously that, we've already broken above that 100%, so there's potential for it to go higher. But at the moment, it looks like an ABC correction of sorts, and so we could push lower. So we'll take a look about how this correlates with, for example, Bitcoin, and just see what the expectations are. Again, if we were to look back, in fact, I will just, we looked at the S&P. So this line, I put this on most of the charts. This is actually the 1 year ago. The show 1 year ago today is where this line was. So we had the dollar index a year ago today was about 102. We're currently 107.9, so 108 basically. So we're roughly 6%, somewhere around about 6% higher in the US dollar against the basket of currencies. So bear in mind, 6% higher in the dollar. So how is that translated across the board to, for example, the stock markets? Well, we've seen that already. It translated, so higher dollar, 6% higher, has equated to, let's just go back to the SPX, the S&P 500. Let's just put the measuring tool on to see the percentage increase in the, so from somewhere around about here to the all-time high on the S&P 500 there. So we can actually see 29% increase. This is during the show. Whilst we've been running this show, the S&P 500 has risen by 29 point something, about 30% increase. That was in line with our expectation of a rising market. All bets are off right now. As I say, I wouldn't want to buy at this with all these resistance levels overhead. But that's quite interesting. We saw a 6% rise in the dollar, but we've also seen a 30% rise in the SPX, S&P 500. Let's just take a little look at Bitcoin. Now, we did say again the other day, looking at short-term signals, we had potentially an ending diagonal here, 1, 2, 3, 4, 5 within trend lines is a pretty typical ending diagonal. And this is why I suspect we may still see some lower prices yet to come on Bitcoin. We saw a fairly sharp sell-off last night. We can see with this red candle, quite a deep sell-off down to 99,000 or something, just under 100,000 last night. We bounced back a little bit this morning, but again, I think that may be just a bit of a dead cat bounce at the moment. I think we've still got a little bit lower to go, probably, especially if this was ending diagonal. We certainly have lower to go on Bitcoin. And we're probably at that time, weren't we, when all of the sentiment was really high. The fear and greed index was really high, very much into extreme greed territory. And so when that's the case, you struggle to find new buyers because they're already all in. So the only opportunity is really to find sellers, and sellers have come in, and they just needed an excuse. And the excuse was the expectation on future interest rates is now that they'll stay higher for longer. And so that was the excuse to drive markets lower. So let's just have a look at where we've gone with the with Bitcoin in the past year. So I need to scroll out a bit because we're seeing quite a bit of gain in Bitcoin. So here's we were on the show 1 year ago. Bitcoin was 42,000. So just put the measuring tool on again to see percentage terms where we've gone from there. So from this point here, the all-time high was somewhere around here. So that is 158% increase. Whilst we've been running this show, we've seen 158% increase. So you basically, if you'd invested 100,000, you'd have 250,000 right now in Bitcoin. You know, if you'd actually invested from the beginning of the show. And the beginning of the show, again, remember, the dollar went higher. In fact, if we put the dollar on here, we would see the dollar went higher, lower, higher. That's exactly what Bitcoin has done. So actually we're seeing correlation with the dollar, which is somewhat unusual. Occasionally it happens. You have to watch for these correlations. And whilst the correlation is going on, if there's a positive correlation between assets, then it's well worth taking note of that. So at the moment, as I say, I think from this low point here, this was a corrective move, most definitely. All this overlap tells you it's corrective against the trend. So when the correction's finished, you know it's going to go higher. And we corrected down to about 49,000 here. and then push strongly higher. As I say, the show a year ago was let's see, where was the price? Okay, it was way back here, yeah, 42,000. So so we've seen this correction downwards here, sideways. So then we expect another impulse to the upside. So that's what we've seen. So I think this is, if this is an ending diagonal, so we've had a wave 1 up, 2 down, 3 up, 4 down, and the 5 up, sorry, 3 up, 4 down, and the 5 up is ending diagonal. So let me just see if I put the fib measuring tool on. Let me just measure what I suspect may be the first wave here. Just move that on to second wave. Okay, that's really nice. I mean, I wasn't even expecting that. I'll just expand it out a bit so you can see a bit more. So what I'm doing, I'm measuring the first wave. So from the bottom of this little spike here. So I'm measuring after this correction, I'm measuring the final wave up here. What I want to see is the internal wave count. So I'll measure the first wave, which is somewhere around about there. I'll then just move it over, transpose it to the bottom of this wave here. That's round about it. It was about there. I mean, I think I expanded the previous one, but anyway, we're there or thereabouts. So wave 2, wave 1, wave 2, wave 3 was exactly 2.618 times wave 1. That's the perfect, a really nice, satisfying, perfect Fibonacci extension. 1.618 is the minimum, 2.618 is more common with crypto. It's exactly what we see here. Now, if that's correct, and then we got the pullback in a wave 4, so that'd be wave 3, pullback in wave 4 to what I've labeled here as 0, or the origin. And that's the origin of this final move up, 1, 2, 3, 4, 5 as an ending diagonal. That is quite satisfying. And if true, it tells me that there's probably quite a bit lower to come on Bitcoin. And as I say, when the euphoria is really high, there's probably good reason for that. And we've had this massive Trump pump. I think there is going to be some disappointment. There's going to be massive challenges ahead. And I don't know whether anybody, let alone Trump, is up to the challenges ahead that we have before us. Both economically, we've got some real headwinds in place. We looked yesterday at the interest rates, long-term interest rates. We saw they've been cutting rates. There is a danger that they're going to stifle growth and we're going to head into recession next year. This is challenging economically. Then on top of that, you've got all the geopolitical tensions and issues around the world. We've still got Russia, Ukraine bubbling away. We've still got the Middle East and Syria and so on. And there's others as well, other potential hotspots or flashpoints. So there's a lot of risks ahead, and the markets are still within touching distance of all-time highs. But yesterday was a potential turning point, you know, with that commentary about fewer interest rate reductions in the future. So that's Bitcoin, as I say, potentially ending diagonal. That would be a 1, 2, 3, 4, 5 from this point here. So we could get quite a substantial correction, I believe, in the making. I'll just go through them one by one rather than jump around now. So we'll just look at Solana. Again, it was expected that we were going to get further pullback, and we've mentioned it. And again, it's been kind of opposite to Bitcoin. We've got an ending diagonal Bitcoin going higher, but we've had Solana's been selling off for quite a while now. It has been corrective, so I still think we may still possibly get after this correction, which may or may not be complete. I mean, we've had it move to just about 100% of this W wave down, transposed to the top of the X wave, and 100% just about took us to where we dipped to last night, which was $199 on Solana. So potentially this could be a corrective move, and we could push again to new all-time highs on Solana. It's not bad from a risk-reward perspective. I wouldn't mind dipping my toe in the water with a long for Solana, but again, we may just get a bit more of a push lower. It's hard to tell. So I'm not actually convinced enough to take any positions right now. You don't have to be trading all the time. It's almost Christmas. We're 6 days away from Christmas, so maybe take your foot off the pedal, take a break, and just see what happens over Christmas. So potentially, as I say, that looks corrective. If we just scroll out and see where we were a year ago, we can see that a year ago Solana was at $72. Even now we're at $210. So clearly we're 3x from when we started the show precisely to the day 1 year ago. With 3x up on Solana. I've always said Solana is a great asset, tends to move more than the others in either direction. Even though we've had this big pullback from 267 down to 210, we're still 3x above where we were a year ago. So it's been a great asset to hold. And who's to say where the future will be with Solana? It still looks a promising asset once this correction is complete. Ethereum's had a bit of a pullback again, like Bitcoin, like most of the assets actually. Interestingly, we actually had a potential local double top. It's not an actual total double top because the all-time high for Ethereum was 4,800, but just look at this level. I'll just put it in. This is quite significant. So the high we had there, the local high, I've just put the dotted line in. The local high was actually made March this year. So what's that, 9 months ago or something, is it? 8-9 months ago. And we just touched that twice, but we couldn't break through it. And these resistance levels, as I say, are really important. We saw it, and we've seen it over and over on different assets. We saw the 100% extension on the SPX, the S&P 500. That was an overhead resistance. We see clearly here overhead resistance again on Ethereum. So price would fail to break through it, and we pushed down. I suspect we may still have lower to go. This could just be 3 waves down, 3 waves up. But even if it's 3 waves down and we're in a 5-wave move to the upside, 1, 2, somehow 3, 4, even if we have a final push higher to go on Ethereum, which is entirely possible, it may be all the assets get a Christmas rally, who knows? As I say, I don't really care. I'm missing out. There's always opportunities within trading. Maybe time to take a break over Christmas. But there's a real possibility that we could see another final push. It could give us another local high on Ethereum, possibly. If we break through this level, which was 4,100, that's a key level. If we break through it, we could rocket a little bit higher, quite a bit higher on Ethereum. So I'll be watching that carefully, but I think there's also a big risk for downside. Risk reward wise, I would wait for close to this level. So both times it touched that level, that was a great time to sell with a stop loss just above, because that was an overhead resistance clearly in place. If we go up there again, once again, it's either a time to sell. You can actually do a sell with a stop loss just above. You can also do, if it goes above, you can then do a buy with a stop loss just below. That would mean whichever way the market goes, your loss is going to be small and modest and hopefully affordable, but the potential gain could be massive. So again, we've seen the gain there. I just put the percentage terms on so you can actually see it. So if I measure from where we were on the show a year ago to where we are now, we can see we're up 86%. So it's actually a fraction of most of the other assets. So Ethereum so far has been a disappointment, especially bearing in mind it has its own ETF now. But Ethereum is not quite the coin it used to be. Everything used to be built on Ethereum. It's not now. There are other better alternatives, perhaps. And it's not been majorly popular. As Bruce was saying yesterday, Ethereum is now proof of stake. And a lot of people prefer Bitcoin, which is proof of work, a mineable currency, which is immutable. It's decentralized. So that's why I think Bitcoin is the real store of value that people love. And Ethereum proof of stake is maybe not quite so attractive these days. So that's why we only got, I say only, but 86% gain whilst I've been running this show for the year. Still a tremendous gain. If you've been involved, it's great. But there's substantial risk. Bear in mind, we're now we've had the third test of this upside resistance. And so it's clearly a solid resistance overhead. So there's risk for downside. Gold has been one of our favorite subjects for the year. And gold has had a tremendous run. Let's just look, first of all, at what gains we've made on gold for the past year. So this was the price, was basically about 2,000 a year ago. And we're currently 2,708. Well, the peak was 2,787. So that was actually a 37% gain. Now, gold being digital gold, store of value, all that kind of thing, It's not one of the most volatile assets. Still, what a tremendous gain it's had. 37% it had over the year. Even now, it's still up, probably around 30%, I think. I'll just measure where we're at today on it. So from when we started the show a year ago to where we are right now, this moment, 29.6%. So yeah, for basically a foundation of an investment portfolio, maybe a cornerstone, maybe just a part of a well-diversified portfolio, whichever way you look at it, gold has been a good little addition to your portfolio. 30% in the year is just a tremendous gain, way above inflation. So great to have held gold and some of these assets, because the inflation beaters they've been this year. Maybe now is the time to start to lock in some of those gains, because 30%, and with some of the crypto assets, 150%, I think, for Bitcoin, you average them out and you're probably up somewhere around 100% in a reasonably well-diversified portfolio. You look at S&P as well, up 100%. Now, if you lock that in, that's actually enough gains for, to tackle inflation for many years ahead and to give you some income. So I think hopefully people have had a really good year, and hopefully if people continue to follow our guidance on this show, they'll have a great year to come in 2025. One of the bright ones that's done better than most has been XRP, of course. It's one that we've said is difficult to predict. It's highly unpredictable. But, with the change in SEC chair since Trump came in, that's going to be inaugurated on the 20th, the new SEC chair. The XRP has gone up massively. And again, it's actually from 60 cents a year ago when we started the show, currently 240. So it's up 4x exactly today. It's been up higher than that previously, but 4x, 400% return on, and a lot of people held a lot of XRP and they hold it long term. I think it's probably a great place to take profit around these areas, because as we know, XRP can be highly volatile. Who knows? And if you've done 400%, wow, amazing, well done. So that's been one of the big gainers. Some of the smaller tokens have done even more in terms of gains. I mean, Jasmy is one that's been, we've been followed a little bit on this show. And again, let's just look at what we've done with Jasmy. So we talked about 4x there, didn't we, with XRP. So Jasmy, we're talking about 0.000582, I think, was a year ago when we started the show. The peak was 5.9 cents. So that's 913%, so 9x in 1 year. Even if you went to where we are today, it's no longer 9x because it's a volatile asset. Let's just see, sorry, where we are there. We started a year ago when the show started. Current price is here. So still up 530%, so 5.3x. Still up on Jasmy. So yeah, some tremendous gains. If you've done 5x, yeah, I don't think you can complain at that. And then one of the more stable assets we'll just touch. It's interesting just to see where we've gone in the past year. BNB is a really good one. It's got a great revenue model. And again, I'll just look at what we've done there in the past year. So a year ago, it was 245. So it's done really well. To the peak, it had done 225%, so 2.25x. Right now, currently, it's 185% higher than a year ago when we started the show. So 185%, 1.85x. So BNB has been a great one to be involved with. So yeah, we've had a great year, Bruce and everybody. So let's see what the year ahead has. We'll be following all the news as it happens on a daily basis, and we'll continue with the show. I know that show's expanding. Well done, Bruce. It's been a great success. It's been a pleasure to be a part of it. Just finally, I'll just finish on one that I mentioned a few times, eVay token. As I say, it's not one for a major investment, but it's actually been quite interesting. Recently, for the past month, for example, it's done 1,665%. So more than 16x in the 1 month it's done. So it had a bit of a revival. The biggest investor of eBay actually has got more hands-on involved with eBay. And since that time, eBay's really taken off. So more than 16x in 1 month alone. And with all the talk that's going on, We're 6% up today alone, by the way, and 8.3% in one day ahead of Bitcoin. So yeah, it's got tremendous potential. If it gets back on track, then this 16x could actually pale into insignificance. It could be much, much higher than that. You can actually find it EVAI. It's the EV token. You can find it on CoinGecko. You can see that on the top here, coingecko.com. And there's actually the contract address is here. Actually, it says there contract info contract. That's the contract address. So if you were interested in buying the token, you can buy it on PancakeSwap. You can get the contract address here. And again, I wouldn't recommend putting a whole load of money into it, but it's actually an interesting punt because 16x in 1 month, it really could go crazy to the upside. There's real potential for it. So again, don't invest money you can't afford to lose, but it's an interesting punt. And a lot of these tokens started at cents and became dollars and became tens of dollars and hundreds of dollars and thousands of dollars. And for Bitcoin, hundreds of thousands of dollars or $100,000. So potential is there. This has got a great fundamental idea behind it about a rating system for cryptocurrency. So I think the future is potentially very, very bright, and I wouldn't bet against it. A brave man who bets against it. So that's where we'll finish today. Thanks so much for listening in. Look forward to catching up tomorrow, hopefully live tomorrow. So yeah, enjoy the show. Thanks for allowing me to participate for the last year, Bruce. It's been a privilege. Thank you, everybody, and bye for now.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.